think they ought to be exercising a lot of caution. I mean, obviously, people are when you look at the spirit of inflation, which is outrunning wages, other forms of income. Obviously, it puts the pressure on people's ability to spend. And I think that right now we are looking at a burst of inflation. Now, long term, as you know, Catherine, I've been very much a disinflationist, actually since the early '80s. But I think we do have a temporary bulge in inflation, and it is very disruptive. So one thing that people need to do is to expect this to last at least a few more months. And I think it forces people to be cautious in terms of their spending because they can't expect their incomes to outrun inflation. Another thing as far as investors are concerned, I think you exercise extreme caution. You've got a lot of volatility in markets. What do you see happening? Well, one of the things that's happening is that there's a rush for the U.S. dollar as a safe haven. And that is, I think, being enhanced by the Russian invasion of Ukraine. You also have vulnerability in stocks. We manage money, and we are short stocks. We do it on a macro basis, the S&P 500. But if anybody wants to hold stocks, I think they ought to do what are called defensive stocks, things like utilities, consumer staples, things that people are going to buy pretty much regardless. But it's not a time to be adventuresome. And one of the areas I think it is extremely vulnerable. Two of them. One are all the speculative areas, the SPICs, the GameStops of the world, the cryptocurrencies, and so on. You've had huge speculation in that area, and another area are companies without earnings or earnings in the distant future. And I'm talking here about not only small stocks but major growth stocks, because one theory is that their present prices are the discounted value. In other words, you discount their future earnings using at a current interest rates. Well, the higher the interest rates, the less those discounted earnings are worth, and hence the lower the current price. And we've already seen sell-off in a lot of these stocks with no earnings, and even with some of the big tech stocks. So I think they certainly ought to be avoided if people don't want to even sell them short.
Mm-hmm. And then what about going long? Like, obviously energy's been, it was so unloved and forgotten for so many years. And now it's been an amazing place to be in terms of an investment vehicle or investment area sector to be involved in. How do you see that playing out?
Energy sector obviously has been on a wild tear, and the issue there is that Russia is an energy exporter. Now, we only have I think 6% of our energy is imported from Russia, but that's not the point. It's much higher in Europe. I think something like 30-40% of their natural gas comes from Russia, and these are markets which are economists would say they're inelastic. It doesn't take much in the way of demand constriction in this case to increase prices. Now, does that mean that energy is at its peak? It very well may be, because there are other sources of energy. But in terms of any big replacement of Russian energy, this takes years. The Biden administration has really gone for green energy. They have not allowed drilling. Frackers are not really convinced that they can tool up again. And liquefied natural gas to get the ships built, the terminals, and so on. This is a number of years to replace that Russian gas. So I think that in the meanwhile, we're probably looking at high energy prices. This is probably already reflected in stocks. I'm not sure you've got great investment opportunities there, but from a consumption standpoint, I think you're going to continue to have to worry when you pull up to fill your gas tank.
Right. And of course, all the companies and corporations that rely still, of course, they do on fossil fuels and all the areas in the market that actually translates into higher prices being passed on for sure. We'll take a quick break. We'll be right back with Gary Shilling.